Good morning. It is Friday, March 6th, 2026, and I'm with Vince Lanci of GoldFix. We've got a lot to get to, but we're committed to keeping it concise. Vince, how are you?
I'm good, thank you. Hold on, I'm putting my phone on mute so I don't.
It's funny. I was at a conference in Toronto last week, and I was doing interviews with some CEOs. And one of the interviews were like 5 minutes in. We're into the conversation, and his phone
Right.
goes off. It's like,
Yeah.
oh no.
Right. But that's like I guess that's the risk.
That's the
Um.
risk. Yeah.
Okay. So what are we doing? What are we talking about?
Look, I think there's a lot to get to today. There's a lot on my mind.
Right.
The weekend will probably be better when it's quieter, but it's Friday. There's no time like the present. A lot can happen
No.
here in the next 6 or 7 hours. Gold has had quite a week, and so some things on my mind, and I'm interested in your thoughts on them. Are We got big outflows from the GLD in the last
Right.
week, and particularly on Wednesday. Actually, it was like a 10-day high in terms of a single day sell-off in the GLD. So
Wait,
it's
wait, wait,
basically
wait. You said 10 year. You said 10 year high, not 10 day.
10-year. Yeah. So the
Right.
biggest amount of outflows in a single day from the
Right.
GLD since 2016 occurred on Wednesday.
That's huge.
Yeah. And just the volatility in gold. So, like, maybe the price hasn't moved a lot on net. We're still around 5,000,
Right.
5,100. But, like, the day to day gyrations have been pretty violent. We're regularly going up or down 3%, 4%. Then on Thursday, the Comex lowered the margin, requirements for gold and silver, and
Right.
I know that's literally like a formula that the exchange has. The volatility was a little lower, so
Right.
they dropped the margin requirements. But when I see um, big outflows from the gold ETF, so that means retail largely dumped gold in the last week, and particularly on Wednesday.
Right.
And then margin requirements for futures trading are lowered. And then this morning, the news, I know we're focused on Iran and the Middle East, but the news that really struck me this morning was a non-farm payrolls report for
Right.
um, January, and now I guess it's February, right? Where you have downward revisions to both of the last 2 months, plus the February payrolls misses by a very wide margin, well over
Yeah.
100,000 payrolls. And the actual number, the headline print is negative 92,000. So I'm like, I want to buy gold.
Yeah. Yeah. Um. Well, let's start with the first thing that you said, and we talked about some of this off the air as well, that you have a big puke, right, on GLD, and you have a margin requirement drop. Now, those things don't necessarily mean it's the bottom, but they do mean that you're closer to the bottom than the top. And as you said earlier, rarely do we have those both happen on the same day. Usually it's a couple weeks apart. So maybe the whole cycle is moving a lot faster than it used to. And maybe we are closer to the bottom than the top. Now, I'm not saying I personally, speaking to you as a trader, I'm not saying I personally want to be long gold. I am saying that, and we're going to be talking about this over the weekend, that I'm more interested in miners right now than the spot market. So based on this information, which you're commenting on, and the fact that the earnings are going to be so good, probably again, knock on wood, uh, miners are probably what to buy. But I think your comment betrays or belies, I'm not sure, confirms that we're closer to the end than the beginning. I mean, that's famous last words. I don't want to say that. I'm not so comfortable saying that about silver, but I am comfortable saying that about gold. And I say that because the gold, because the war in Iran just puts another reason to buy gold. Or put it this way, even if they're not buying it at these prices, they're not selling it. No one's selling gold now. So had we not had a war with Iran, your comment about the jobs number becomes even more obvious that the Fed has to cut. the war with Iran, maybe he cuts less likely, maybe he cuts more likely. I don't know. But I will say this, without the war in Iran, we're in a recession. With the war in Iran, we're in a stagflation. So I don't
Mm.
see how we have any recourse except for either gold to go higher because the Fed cuts, or gold to go higher because the Fed can't cut.
Yeah, yeah. So I like what you said there about the stagflation. I think that's the money shot here is like, yeah, I know like first level thinking would be crude oil spiking above 80, almost 90. I mean, by the way, that's a very short term spike. We have no idea if it can stay up there or how long it will
Right.
stay up there. Most likely it will be relatively short lived and crude will settle back down into the 70s. But anyway, that's not really a reason for the Fed to cut or not to cut. The Fed, I think, will be more focused on the labor market here. And inflation is not unhinged enough that it's going to be like, oh, we have to we can't cut or we're going to hike, right?
Right.
I think more likely they're focused on the labor data, which is now quite acute. I mean, look at the trend in non-farm payrolls for the last 6 months, 7 months, and then look at today's report. I mean, I don't think we can overstate how weak a negative 92,000 print is for February. And then
I want to just add a little footnote, because I think that people will push back over the next couple of days and say, well, it was because of the snow, because of the weather. Even if you factor that out, it's still a very big drawdown. So I just wanted to get that in there.
yeah, it's a very big drawdown, and the revisions to the last 2 months also total over 60,000. So all told, we're talking about over 150,000 minus to where we thought we were, right? And the trend is down, right? And the unemployment rate 4.4% and climbing. The trend in the unemployment rate is higher. And I think this has to have the the Fed's attention, and certainly with who's president and
Right.
and the administration, they're going to press very strongly for easing and probably some extraordinary measures, quite frankly. And I think that is just very favorable tailwinds for precious
Yeah.
metals.
Except that Powell probably will not cut to spite Trump. But I mean, that's a joke. But I get your point. I think you and I, we talked about this off the air as well. I think you and I, we're in our commodity world, and we're looking for all the reasons why the Fed will or will not cut. And oil higher is a reason to not cut, and inflation lower is a reason to cut. And we're looking at those things from that lens. But I think the lens that's going to matter the most is the headline I saw yesterday was Blackstone took a private equity fund that they were marking at 100. We didn't talk about this off the air, but it happened yesterday, so it's current events. Blackstone took a private equity fund that they had previously marked at 100% valuation down to zero. So private equity is collapsing. So maybe we're looking at the commodity world, but maybe Powell's looking at the unemployment, as you said, and he's looking at the next credit problem, and that'll be the reason he cuts. That'll be the reason he defaults to cutting versus not cutting. Anyway.
Yeah, and Powell could spike could spite Trump, but he's a lame duck anyway. What is this, 3 months? So I think that's a moot point. I think that the private credit that headline is quite meaningful, and it's starting to gain traction in the last couple of weeks. More and more people are talking about private credit, and that BlackRock fund. I'm not sure if it's the same fund you're talking about. I know there's many of them. They are limiting withdrawals, and whenever you have a hedge fund or a private equity fund or whatever, a bank saying we're limiting your access to your money and changing the rules in the middle of the game, that is just, I'll take a gold bar, please.
Right. That's right. I definitely was talking about Blackstone, but BlackRock also has problems. BlackRock is gating investor money. Investors can't take their money out. That's a reason you want to take your money out. and Blackstone marking their private equity holdings down to zero. I don't know how much longer we can hold on, but I got to think Powell's right now trying to I think Powell's just, I personally think Powell's deciding whether it's going to be 20. I know how you can make the case that he might not be wanting to cut, but I think he's going to try and get away with 25 basis points and then let the next guy cut 50. We're probably going to have that. And this war is, I'll tell you this, statistically, you're talking about gold and oil. Statistically, you want to trade oil during a war and you want to own gold. And by that, I mean, the first 0 to 90 days in gold is a very, very mixed bag historically, if you're looking back at past data. But the first 6 months in gold is almost always very bullish. So after 90 days, you're not really sure. But especially when oil's been kept up for a while, the gold price ends up filtering it out. An example would be 9/11. An example would be, example would be any war that we had recently. Basically, the first 30 to 60 days are a crapshoot, and we're in that right now. It's the next 90 days that matter after that, and that'll kick in after, if oil stays up here higher, because then the stagflation starts to really kick in. And then, I just think that when banks are, when the Fed is kept given a choice between cutting and not cutting, I think he wants to cut. I mean, inflation is probably 2%. I mean, I'm fighting myself as I'm saying it, but I don't know. Maybe we should look at oil or Venezuela.
Yeah, let's talk. So two headlines I want to pick your brain on. The first one was this headline that the Poland central bank might sell some gold to beef up its military. I thought that was a very strange headline, because Poland has been one of the central banks that's been buying and accumulating gold in recent years, and they seem to really get the gold trade. Why would you do an about face and talk about selling some of your gold stockpile to fund the buildup of your armed forces? I don't know. That seemed like a red herring to me.
I think I'm gonna say, yeah, it seems like a red herring to me too, but I'll treat it like it's not a red herring. I'll take it seriously, and I'll say this: Poland late last year said they were going to add 700 tons of gold. So they're still buying. They're not done buying. So this guy, my understanding is, he has to literally lobby for that. He can't just say we're going to stop. We're going to spend money on gold. He has to actually get congressional, whatever they call it, whatever their congressional representative situation is. So he has to actively lobby for what he wants to happen. So I think what happens is he lobbies for it, and then maybe they cut back on some of the purchases that they're going to do. But they're not going to sell gold while they're buying it. They're not doing that. He might even be talking it down so they could buy more. Who the hell knows? But to be fair, without being too much of a gold bug about it, I mean, Poland's got to be looking at Europe saying we need to have our best military as soon as possible. And with NATO pulling out, that's more weapon sales that they need. So I take it seriously that he's going to buy it. I don't take it seriously that they're going to be selling gold. I don't think so at all. I think central banks are in the process of printing money to buy gold right now, and so they're not going to sell gold to buy to buy jet planes to protect themselves. They're going to just buy less gold. So they buy a little bit less gold, but I'm not worried about it. But it was interesting. You're right.
Okay, and then the Venezuela headline. This one was really fascinating to me. Basically, what was it? It's like $100 million of gold that they're shipping to.
Yeah, I mean,
the
it's
refiners.
Really not a lot. It's 1,000 kilograms.
Okay.
1,000 kilograms of gold, about $100 million. And it's people who look at the stock of the trade, meaning the volume of the trade, they say it's not much, and they're not wrong. It's not much, especially if Fort Knox is empty, right? But it's significant in the sense that it's a continuation of the policy that we're acting on in Latin America, and that is Latin American natural resources are ours. Silver, gold, and oil are not for China anymore. They're for us. So even if it's not a lot of gold that we're bringing in here, the fact of the matter is it's gold that's not being sold to the BRICS. So it's $100 million in gold that they're not buying. So we're taking away, I mean, that was basically black market gold, but we're taking away black market gold at the margin. That's bullish for price because black market gold sells at a discount. So now the price is going to go up from that. So not to mention that it's the first of many. I mean, when you combine everything that's happened since immediately before Venezuela with after Venezuela, you could see that the Western Hemisphere is just off limits for natural resources. We're protecting ourselves. Meanwhile, we're also destabilizing the Middle East by attacking Iran. So we're just basically making our side of the world safer than their side of the world at the same time. But the Venezuelan gold, I call it massive. It's not a massive dollar amount, but it's a reversal of flow. It's like a river that was flowing one way just changed directions in midstream. That's big. You've gone from an exporter of gold to becoming an importer of gold. That's what the U.S. is doing now. That's not gold we're buying to hedge. That's gold we're buying because we need it. So I think what you're seeing is an increase in urgency by the U.S. to get gold here stateside, and that's part of it. I'm very enthusiastically bullish by it. We're just pulling commodities away from the East.
Yeah, I think your take on that news item is spot on. So Venezuela's gold is not flowing to Turkey or China anymore. It's coming to the US and to our refiners. And in a way, that's more secure. That's better for Venezuela. There's less transportation costs. They're more likely to get paid a higher dollar amount for that gold. And the US is saying the resources in the Americas are American, and you have no business dealing with silver and gold in South America. It goes through us.
Plus, we're telling Venezuela, give us the gold or we'll bomb you. No, I mean, we're not saying that, but I mean, it really is an extortion racket. We're just basically, the Western Hemisphere is ours now, and either you work with us or you don't export your gold anywhere. That's basically what we're doing. So, Minervan is the name of the company, I think.
Minervan, yeah.
Yeah.
Minervan. Yeah, so yeah, there's a lot to unpack this week, and I'm sure you'll be unpacking more of it on your Substack over the coming days. And just final topic before we do the exit here and tease our next conversation. So I think that your theme in the last few weeks has definitely been it's time for miners. My theme for the last few years has been it's time for miners. And I feel like this morning, that non-farm payrolls report and everything else, we're seeing out there, there's the confluence of news that's, hitting the tape here, at the end of this week.
Coming in, that's going to be, I think I think our timing on the whole miners thing is actually really good when you bring up the point that, what is it you said? You said this will be the first quarter. I mean, assuming that the market doesn't get hit, this will be the first quarter that gold is above 5,000 the whole quarter.
Yeah, the average selling price for Newmont, Barrick, Kinross, it's above 5,000 right now for Q1. And there's only 3 weeks left in the quarter. Their free cash flow was just out of this world, record highs in Q4 of 2025. Well, now it's just going to be that much bigger. They're literally overflowing with cash. I mean, you can think of like a piggy bank that's just bursting at the seams with $100 bills. This is the gold miners right now.
I guess the only thing we have to be worried about is what they're going to do with the money. Make sure they do the right thing with it, and that's one-time dividends, share buybacks, or vertically integrating.
Yeah, exactly. Yeah, so we'll talk about that. There's a lot to dive into. I have a lot of thoughts, and we'll delve into all of it. But I think we can agree this is the time for the miners. And actually, this morning, stepping in here, I bought some Barrick. Friday morning on day 5 of this little retracement, and that's what happens in bull markets. You get these violent snapbacks that shake people out, scare people, and I think this one is no different. And so when the chart gives you a support level, and then I'm very comfortable with the fundamentals and the catalysts over the coming weeks and months, it's a trade setup. So Vince, thank you for your time, and we'll talk again very soon.
Okay, thanks a lot. I'll see you tomorrow.
See you tomorrow.